Welcome to the 5-Minute Prime Podcast. Quick, actionable tips to master personal finance and real estate investing. In just 5 minutes a day, we'll help you build wealth and achieve financial freedom. Thinking about buy and hold rentals in 2025? That's a smart direction. But if you're still leaning on the same old strategies, you might miss some of the changes happening right now. The rental market is evolving, and staying in tune with the latest trends is essential. In today's episode, I'll walk you through the key market trends and share expert insights that are shaping rental investing in 2025. If you're sensitive to market shifts and want to stay ahead of the curve, these points will help you refine your strategy and build a more resilient rental portfolio. Okay, let's start with hyperlocal location. In 2025, location means getting down to the micro market level. It's not enough to say a neighborhood is good, you need specifics. First, consider second-tier markets. Instead of competing in overheated primary markets, look at smaller towns or regions like the Intermountain West or parts of the Midwest. These areas, as Forbes notes, often offer better value and less competition. Next, focus on the details right around the property. Check its proximity to key employers, essential amenities, and quality local schools. And don't forget climate risk. In 2025, assessing whether an area is prone to hurricanes, wildfires, or floods is critical, since these risks can drive up insurance costs and affect long-term value. Second, let's talk about the 2025 renter. Their needs have evolved, and if you don't adapt your properties, you risk facing rising vacancy rates. First up, flexible spaces. With hybrid work now a permanent trend, renters need layouts that easily double as home offices. Think adaptable floor plans that can accommodate a dedicated workspace without sacrificing living area. Next, sustainability isn't just a buzzword. Energy-efficient upgrades like smart thermostats, high-efficiency appliances, and water-saving fixtures not only lower your operating costs, but also appeal to eco-conscious tenants. And finally, pet-friendly amenities. More than 40% of renters are actively searching for pet-friendly homes. In 2025, offering spaces that welcome pets isn't optional. It's essential if you want to attract a wider pool of quality tenants. 3. Let's move on to affordable rents. Luxury rentals might catch some eyes, but in 2025, affordability is the real winner. If you overprice your units, you'll end up chasing tenants instead of attracting them. Research shows that about 40% of renters now prioritize affordability above all. With national rent growth moderating, there's less room to squeeze every extra dollar out of a unit. Overpricing can mean your property sits empty longer than it should. Instead of trying to push for maximum rent no matter what, focus on the rent-to-price ratio. In other words, target properties where the monthly rent realistically matches the purchase price. This ensures you have positive cash flow, even if rent growth is modest. Remember, in real estate, money is made when you buy, not when you sell. 4. Tenant churn is a profit killer, especially in today's market where affordability pressures make it harder than ever to attract quality new tenants. In 2025, keeping your existing good tenants is not only more cost-effective, it's essential. When rental markets are competitive and rents remain affordable, finding high-caliber tenants becomes increasingly challenging. That's why focusing on tenant retention is key. Let's break it down. Data shows that leases are now averaging around 14 months, which is great because longer leases mean fewer turnovers and lower associated costs like marketing, cleaning, and lost rent. In addition to securing longer leases and keeping turnover costs low, focus on tenant-centric practices. Be responsive to maintenance issues and communicate clearly. When tenants feel taken care of, they're more likely to stick around. Even in smaller rentals, creating a sense of community through occasional tenant events or a dedicated online space can encourage longer tenancies and positive word of mouth. 5. Let's talk tech. First off, think about AI-driven property analysis. Today's AI tools can quickly evaluate property data, screen tenants, and optimize rent pricing, all in real time. I've been calling this the future of deal analysis. Imagine having an AI assistant that flags risks and adjusts your numbers on the fly. That's the edge you need. And speaking of AI, if you missed our previous episode, Supercharged Deal Analysis, Unlocking Profitable Cash Flow with AI Tools, You really should check it out. That episode dives deep into our GPT cash flow calculator, a tool that instantly crunches your numbers and runs multiple scenarios. You can try it for free at reiprime.com. All you need is a free ChatGPT account. Next, consider online booking and management platforms. Renters today expect to pay rent online, submit maintenance requests through an app, and even schedule viewings without all the back and forth. These digital tools make your operation smoother and free up your time for the bigger picture. Then there's digital marketing. Relying on a for rent sign just won't cut it anymore. In 2025, you need to harness social media and targeted ads to reach a wider audience and fill vacancies fast. Digital marketing isn't just about being trendy, it's about getting results. Next, let's talk diversification. Putting all your eggs in one basket is simply too risky. With market uncertainty everywhere, spreading out your investments is essential. Spread your investments across different property types, rental niches, and geographic areas. A well-rounded portfolio not only protects you from regional risks, but also promotes long-term stability. Lastly, complacency kills in real estate. With the affordability issues, today's rental market is different, faster, and more competitive. That's why continuous learning isn't just a nice to have, it's essential for long-term success. First up, market monitoring. You need to keep an eye on rental rates, vacancy trends, and local economic indicators on an ongoing basis. The data you gather directly influences every decision, from adjusting rent levels to planning new acquisitions. And finally, it's important to apply what you've learned in a way that's personalized to your unique situation. The strategies and tools we've discussed are meant to serve as a foundation. But the real magic happens when you tailor these insights to what works best for you. All right, let's quickly recap the 7 key essentials for 2025 rental investing. 1. Hyperlocal. Focus on micro markets. Identify undervalued neighborhoods by examining local employers, amenities, and climate risks. 2. Evolving renter needs. Adapt your properties with flexible layouts, energy efficiency, and pet-friendly features to meet modern demands. 3. Affordable rents. Target a strong rent-to-price ratio and workforce housing to ensure steady, positive cash flow. 4. Longer leases and tenant retention. Secure extended leases and maintain high tenant standards to minimize turnover costs. 5. Tech-driven landlording. Embrace AI and digital tools to streamline property analysis, management, and marketing. 6. Diversification. Spread your investments across different property types and geographic areas to hedge against local market risks. 7. Continuous learning. Regularly update your knowledge and strategies to adapt to evolving market trends. Your challenge for today: choose one property you're evaluating and list one improvement for each of these 7 pillars that could boost its performance in 2025. Thanks for tuning in to the 5-Minute Prime podcast. Subscribe for more actionable insights and get ready to build a smarter, more profitable rental portfolio in 2025.